So much for a splashy first day of trading. Shares of Chinese video website Tudou began trading on NASDAQ yesterday and promptly sank. For more on this, we're joined by Papp of Oberweis Asset Management. He helps manage $900 million in assets, including the $200 million Oberweis China Opportunities Fund. Jeff's in Chicago for us. Thanks so much for joining us. So Tudou's listing yesterday, not exactly a runaway success. What do you make of the timing of this IPO when conditions were perhaps not great?
Yeah, I think it was probably not a great time to go public, but you have to remember that Tudou had filed to go public over a year ago. There was some unique circumstances with Tudou's founder being involved in a messy divorce that pushed back the IPO, and yesterday was the first time that they really had the green light to go.
I mean, it's not a great time to launch IPOs right now when the markets are so skittish. How do you think the recent rout in equities and these concerns that we're now starting to see coming back is going to impact the U.S. IPO market in the next few months?
Well, I think right now as an investor, and we at the Oberweis China Opportunities Fund, ticker OBCHX, are looking for companies that have the right products and services to go public. And why I say that is because when you look at Tudou as an example, yesterday's valuation was extremely attractive. So if you can find the right companies that want to be listed publicly and don't care what the market thinks in the immediate short term, you can find some pretty attractive deals. So we do think there are a bunch of companies that have the right products and services that are going to continue to list and probably be a favorable time for investors to look at them.
But we didn't see that happen with Tudou, did we? Because if there's one place in the world where we're likely to see growth that's healthy at the very least, it's China. And given their exposure to the Chinese consumer, I mean, I suppose that positive point wasn't really reflected in what we saw at the markets. It's trading at a discount to its rival UCO.
Right. Well, we have to remember yesterday there was an interesting piece of news that surfaced mysteriously right before Tudou came public, and that was that Youku, as you mentioned, its largest competitor, was potentially going to team up with Tencent, who has a huge internet population of some 400 million users, and create a dynamic partnership where Tencent would take a stake in Youku. And obviously this news pressured Tudou's shares. Now, how much of this is real and how much of this could have been Youku and some of the other competitors teaming up to try and foil the Tudou IPO is somewhat suspect. So we have to take that into consideration as well, and that may have impacted Tudou's trading yesterday the most.
How do U.S. investors feel about Chinese companies right now? Are we seeing more and more funds shift east because there have been concerns about inflation, a slowing economy, and then also fears about a lack of transparency in accounting?
Yeah, well, right now, sentiment towards Chinese companies is extremely low. Valuations are then reflected in that and are also extremely low. But I think if we look at back to last year, the same situation seems to be playing out, and that is U.S., European equities did extremely well in the first half of last year and the first half of this year as well. Then when QE1 rolled off and now as QE2 has rolled off, we've seen economic activity slow down here and in Europe, and then people have decided to try and look for places for growth. And the one certainty that we do seem to have in this world is that the Chinese middle-class consumer is taking off and booming, and therefore Chinese growth should be somewhat assured. So if we continue to find that U.S. investors and European investors in the second half of the year are going to try to reallocate towards growth, and China should stand to benefit as a result.
And how much a concern is U.S. debt, also the European debt crisis right now? Is that not still looming over the market? Because I suppose neither of those risks are going to subside anytime soon.
No, I don't think so. But again, this gets back to China. If we look back to 2008, when China was more tied to export-driven growth, whereas today they're much more tied to internal consumption growth, coming from a middle class that's continuing to see wages increase, that's continuing to see spending power, continuing to see disposable incomes rise. This should put China somewhat more relatively insulated from the outside pressures of the world. There will obviously be some pressure if the U.S. and European economies slow down, but I think it's much more manageable this time around than it was in 2008.
Well, so is the market looking stable enough that action will pick up after Labor Day, or will issuers perhaps continue to stay low for a little while?
Well, again, I think it gets back to if you have the right company, it's a perfect time to go. I think if you look at a few U.S. companies that are Oberweis domestic products, including our Oberweis Small Cap Opportunities Fund is invested in, something like a HomeAway, ticker AWAY, that is a leading vacation rental operator, has done extremely well because they have a dynamic product that's gaining rapid adoption. If you look at some niche boutique retailers that have come public, Tiavana and Francesca's come to mind, those have done extremely well too because, again, adoption is taking off, growth looks extremely strong, and relative to other names that people can invest in, they stand out, and therefore they're being heavily subscribed to and doing extremely well in the aftermarkets.
Thanks very much. Jeff Papp, Senior Analyst with Oberweis Management. Good to get your thoughts.